I do think that one of the bigger calls for next year for investors to make is, where do you want to be globally? Because obviously the U.S. is the obvious place right now, because that's where the growth is leading. But you know, the U.S. economy is about a quarter of global GDP. But the U.S. stock market's over 50% of the global stock market. So I think there's a little bit of a disconnect where the dollar may actually be peaking, and that would create opportunities for overseas.
You implied this, but I want to make it explicit. In the past, dollar and interest rates have started to rise, and the stock market had what they called a tantrum because of it. Now we see the dollar and interest rates rising, and the stock market's going along, right along just fine, because the expectation is the reason those are happening is because there's going to be greater growth.
Yes, it's the intersection between growth and financial conditions, and growth is returning, so it allows for the dollar to go up more.
But at some point, it derails the stock market, is your point. At what point?
Well, that's a tough question.
Are we soon, later?
My guess is that if the 10-year goes, let's say, to 3 or above, that's going to be a problem, because that's too much too soon, because we really don't know how much of this growth is even going to materialize. We don't know, once we get to the sausage-making process in Congress, what is actually going to emerge. So too much too soon, I think, would be a problem.
A lot of people, economists, believe that if they change the corporate tax structure, which is the GOP House plan, go to this border adjustment tax, don't everybody roll their eyes, it is religion. The dollar will get 20% stronger. Yeah. Is that part of your calculation? Are you thinking about that?
No. So on paper, the dollar becomes a transition mechanism, that it's a perfectly efficient system.
And it gets stronger, hence.
And if you take in, over $1 trillion of taxes from this border adjustment tax, it's going to be It'll be dollar strong. And, the dollar ultimately comes down to capital flows, or any currency does. And I think it's much more complicated and messy than what it may look like in an economic study. So my sense is that if the U.S. gains at the expense of other countries, if the global economic pie doesn't get bigger, then it's a strong dollar environment. But China is firing on all cylinders right now, and the global growth story actually is improving even beyond just the U.S.
So in that sense, won't be as big.
In that sense, the dollar can at least stop rising, or maybe even start to level off here, and that would be very bullish for non-U.S. equities, especially emerging markets.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.